This is a video chart presentation of Athlon Medical. It's a bulletin board listed company trading our ticker AEMD. It's a 1-year chart. You can see Athlon's had a very strong 2013, coming into the year around 6 cents, peaking up at 30 cents, consolidating from those highs, holding the 200-day moving average. And here in December's popped back above the 50-day moving average. It's making a little bit of a rounded look to it, holding over top all the short-term moving averages. A little bit of a down day on Thursday, down 3.5%. That's not that big of a concern to me, because the stock did push above a resistance point at 15 cents. And generally speaking, looking at the longer term, this chart has a very nice upward channel that it's formed. Now, one of the things that caught my eye about this was the upward move in the MACD, probably the most commonly used gauge of trend. In the recent break now of the 12 and 26 EMAs, back through zero is what technical traders call breaking the money line, because it's a bullish indication of trend. You can see back through here in June, when the stock had just been trending sideways coming off the high, MACD started moving upward, broke through zero, and eventually the stock chart took off. Price per share broke through some resistance points and went on to make the new highs up around 30 cents. So we'll pay attention to this going forward because it's typically a very bullish indication of the chart. Similar look to the PPO. The ADX is pretty neutral at this point. It is starting to climb, show that some strength is being added to a direction. And with the positive DI, this green line on top, that would signal that the direction is upward. But with the ADX registering around a 22, that's still considered being in a trading pattern. Want to see it over top of 30 to be in a true trend to solidify the direction of the chart. It's a nice look to the MFIs, holding above 50. That tells me people are paying higher prices for the stock. Fair amount of sideways movement going on with the accumulation distribution, coming from the highs, a little bit of a downtrend, but overall, following the pattern of the chart with upward movement. Right now, this isn't a great look with the shaken money flow down in the red. That tells me that over the last 20 periods, selling pressures outweighed buying pressure. So that'll be something important to pay attention to. I want to see it back above zero, show that buying pressure is clearly outweighing selling pressure. CCI, the technical buy signal, came on the break of 100. It's not a sell until it breaks back down through 100. Full stow, up around 80, holding the upper half of the indicator, tells me momentum is being sustained in the play. In the tricks, it's red similar to the MACD. It's also a gauge of trend of the chart. Breaking back through zero is an important sign of bullishness, similar to as I referenced with the MACD back here in June. You can just notice that the tricks moves more slowly, and it didn't make the break until the very early part of July. Simply put, it's just not as susceptible to whipsaws as the MACD. It's triple exponentially smooth and moves very slowly, so breaking through that zero mark shows a steady upward trend. RSIs had broken back through 50. Again, a very important component to show momentum in the chart. Tailed off with the down day on Thursday. Again, I'm not that concerned about one red day. I just want to see the RSIs holding over top of 50 to show that bullish momentum is being sustained in the play. Now, what I'd like to note through here is that the chart did push through some resistance right there at 15 cents. You can see back in the fall, that was an area of support. Classic TA says that support becomes resistance once it's broken, and that's indeed what happened. It was a tough spot. Candles couldn't push above it. They finally did early on this week, and I want to see if they can hold above that mark, because that'll get this 50-day moving average starting to curl upward and continue its overall upward path, which is a sign of a very strong chart where the price per share is over top of both the 50 and 200-day moving averages. Now below that, there's some more support that comes in right through the area of 13 cents. That would be the very bottom that I'd want to see hold. That's the 200-day moving average. It's a pretty strong area of static support as well. So that'd be as low as I'd want to see this chart dip if it did fall back through 15 cents. Now to the upside, I'd look for resistance right at 18 cents. It did peak up just a little bit higher than that in September, but that was an opening price. Promptly came right back down, closed below it. That was a peak here in November as well. I think that's going to be a pretty strong area of resistance. But again, that's a nice climb from Thursday's closing price. What stock charts has is 15 cents. Looks to me more like it's 15.5 cents based on the candle. But still, that's about a 15% upside coming off a nice support level. Beyond that, probably a little bit more right in there through 20 cents. But there's not really a whole lot in the way until you start talking about these old highs, 27, and certainly up near 30 cents. So we always talk about charts that are sitting on a support point, nice distance to resistance points, giving plenty of headroom for growth. But what I really like about this chart is it's pretty clear to see this upward path that's happened across 2013. Almost held it to the T. So this would be a nice chart to follow along with the end this year and going into 2014 to see if this upward channel is going to continue. But as always, it's merely my interpretation of the AEMD chart. Thank you for watching. Trade smart.